Hey, what's up out there? It's Dave Duford here at davidduford.com, where I help insurance agents like you become top producing insurance professionals. And today we continue our interview series with insurance agents across the nation, where my job is to help them answer their burning questions as it relates to selling more insurance. And across the table, I have Mrs. Lolly. Say hello out there, Lolly.
Hi.
Thanks for joining me today, Lolly. So we were kind of prepping here, talking about what to talk about. And you had mentioned closing and door knocking. So why don't you go ahead and ask your full question so the audience knows what is concerning you, and I'll do what I can to help.
My closing percentage is really bad. It's like 2%, and I really need help with that. And door knocking, I do it a lot. It seems like I'm not getting any better at it.
Okay. So closing more business than what we're doing. And of course, converting more door knocks. So kind of like I prefaced you with, Lolly, I think these potentially could be two interrelated issues. And what I'm going to attempt to do is ask you a few questions to better clarify for my own sake, as to best help you. Many times if you start looking at the numbers, and some of these numbers you may have to just guess, that's totally fine, kind of guesstimate, if you will. And but maybe we'll arrive at some definite goals or definite directions to go. So let me do this. I'm gonna grab a pen real quick, a piece of paper here, that'll work. And let's start first with covering the basics. So what kind of mail or what kind of leads are you using right now?
Well, I was getting like 25 leads a week.
25 leads. When you say leads, are we talking direct mail, Facebook
Yes.
leads? Okay.
Direct mail.
Are these fresh or exclusive? Or are they like brand new, fresh, or are they aged like 6 months, 12
No,
months?
brand spanking new, fresh, exclusive also.
Okay. Okay.
I mean, that's what I believe. That's what I signed up for.
Yeah. So 25 leads a week. Now let's kind of envision as you were getting 25 leads a week, trying to arrive at some averages. So if you were to sit down with 25 leads and call to set appointments, how many out of the 25 did you actually book an appointment calling over the phone?
Earlier it was less, but lately I could get maybe 12 to 15 appointments.
Really? Okay.
Well, like I said, I kind of make people take the appointment, which leads to a lot of getting porched.
Yeah, that's probably going to happen a little bit more to a certain extent. The more you set, the more you set, the more you get porched. There's a running ratio. So, I'm not so concerned as the fact that you're getting in front of half or more is a good thing. So 12 to 15 out of 25 leads were set as appointments. Okay.
And I usually sit in front of 10 people a week minimum.
Okay. Yeah, that's fine. 10 presentations. So we got 10 actual presentations out of 25 leads. So out of the one, so let's say you get half of these 25 leads set as appointments. Does that include those that you door knock? And if not, how many of the remaining leads are you getting into the door via door knock?
Wait, what? How many? The
Again,
10 that well, all right. So now most of the ones that I set, I get in front of, like I said, maybe I can get 15 appointments, but it's like even some of them call me back 3 minutes later and say, hey, look, you kind of forced me into it, so I'm not doing it. So
that's fine. So let's look at the ones that when we think about door knocking our leads.
I've actually never sat down with somebody on a door knock. Never.
Okay.
And I do a lot of door knocking because a lot of people don't answer the phone.
Okay. Okay.
I've actually gotten in the house a couple of times to be told I'm unemployed, or I really don't want this, or can't you see on the card it says I told you to mail the stuff.
Okay.
So
we can say reasonably that the only appointments you're getting a week, the vast majority of the time, are the ones you set over the phone, correct?
Yes, pretty much.
So 0 door knocked on average.
Yeah, I've never closed a door knock sale, never.
Out of your average door knocks a week, Are you saying that, would you say you've averaged 0 of those door knocks turned into presentations? Or are you getting 1 or 2 of the door knocks turned into presentation on average? Where do you
No,
think?
I've never, ever, ever. I can't remember a time I actually had a presentation. I can get into the door, but I never had a presentation.
They're telling you like, I don't have a job. I don't have a, they just kind of don't want to do it. Okay. Gotcha. So again, what I'm hearing here is out of the appointments you set, they're exclusively done by calling on the phone and setting them, correct?
Most of my appointments, all of my presentations have been through the phone.
Okay.
Setting appointments.
Okay, cool. That's good. Now let's move to the presentations. You're keeping 10 of the 12 to 15 you call on average. If you sit with 10, how many policies are you writing out of the 10 that you see on average?
I'm embarrassed to tell you.
No,
a lot of times it's 0.
Okay.
You know, okay, can I tell you what I've done since I've been doing this?
Yeah, sure.
Like, I think I've written 5.
Okay.
And that's like 4 months.
Okay.
But averaging almost 1 a month. That's really bad.
Yeah. Well, let's keep going with these numbers here, because again, what I'm trying to do is segment. There's a variety of reasons why agents aren't getting the results they're getting. And my goal of asking these questions is really just to isolate out what you're doing great and what you should continue to do and what you should apply all of your attention to, because sometimes we think one activity is responsible when it's something else entirely. So, okay, so we're sitting with 10 people. We're not writing policies. We're working fresh leads. They're exclusive, 25 week. And out of the 25 you're getting on, you're setting about half as appointments. All sound correct so far?
Yes, I'm pretty good at setting appointments. I have to say that.
So I think,
I'm a good appointment setter.
Yeah. So let's state the obvious here. What the problem is not. The problem is not the lead type per se.
No.
Is in the sense of you're working exclusive leads. They're fresh. They're direct mail. They're everything that you want to have when you start off in this business to give you the best edge. So we'll shuffle that aside. That's good. Now there could be a question.
Definitely not the leads. I have good leads.
Okay. Yeah. And I mean, you could argue, is it this lead or that lead? I don't think at this point that's worth going down. And I'm not suggesting you are, but some agents might think, well, does the lead say life insurance on it or not? I don't think that matters, considering that you're not really writing much business at all. I think there's something going on in the presentation, which we'll get to. The appointment setting is outstanding. I mean, if there's anything that stands out from this, is that you're doing a really good job of converting the leads into appointments. Again, most agents, if they hit half of the leads, even 40% of the leads, it's acceptable to me. The fact that you're getting sometimes more than half booked is rock solid. So whatever you're doing appointment setting, don't change anything. Okay. And don't worry about people calling you back and saying, hey, look, you forced me into this. That just means you're aggressive on the phone. And sometimes you have to do that. Okay. And it's better to be aggressive and have, a few more no-shows than to be, weak and not get nearly as much volume. So I think on the whole, with appointment setting, keep doing what you're doing. It ain't broke, so don't fix it. Where I think the obvious problem here is something is happening as soon as you step into the client's home and you begin to do your presentation and you're not getting the sale. So I think that's where we need to spend all of our time in this call to determine what it is that's going on in your sales call that's causing your buyers not to buy. Because what we've got here is a fairly large sample size. We have several weeks worth of direct mail ordering, it sounds like. So I think we can take from this some generalities in the sense that there's something consistently going wrong that we're going to try to diagnose and fix today. There's one thing to have a bad week. When you have multiple bad weeks in a row, we got to figure out what's going on. So let's
I'm just bad at it. You're right.
Yeah. So, and by the way, you mentioned door knocking as being a potential concern. I'm not concerned at all. Look, if you're getting 50% of your leads booked as appointments, not a big deal. Okay. If you can call and get half of them booked, things will work itself out. And it doesn't surprise me that with so many that you're booking, that you're not getting as much traction with those other ones that you're door knocking. Because I know there's probably a percentage that you're trying to door knock and nobody's home and they don't
Yes.
answer the phone. They
Yes.
probably work some weird swing shift. That stuff is normal. There's going to be a couple
Right.
of leads for every 25 that they just like, they don't exist, you know, and they can't reach them. So
Well,
again,
I read where you never say die.
mhm.
Until you get a hold of the person, you don't ever let the lead go.
Yeah, continue to do it. They may be holed up in a nursing home somewhere, or maybe they had a family member die and they're staying, you know what I mean? There's all sorts of weird things. Keep calling on them, because in a sense it's fresh still, because if you're not getting them and you're trying, nobody else is either. So the first person who gets it's like a fresh lead. It's just that I have less expectation for the door knocking, and that's the
Right.
point I want to demonstrate when you're doing as well as you are with appointment setting. So I want to put the door knocking aside because you're accomplishing your appointment setting goals. Let's talk about the sales call. What I would like you to do is pull out the memory bank and tell me the last 3 presentations you've done, if you can recall. What were the reasons that these people did not buy?
Oh, I think that the one I texted you about the other day, the Lincoln Heritage one, where I went on that call, she didn't get back to me, and I called her, but I think that what I did there was I encouraged her to get life insurance for herself when she was trying to get it for her father, and I went in the other direction too soon. I think that she
Okay.
was thinking that I was too pushy about getting life insurance for her, as opposed to trying to get something for her father. But he was going to be a guaranteed issue for sure. So I told her, look, you don't want to do that to yourself. If something happens, you should be covered before, that happens to you. But so I didn't get that one. I think that may be what I did in that call.
Okay, what about the second one? We'll go back and cover these in more detail. I'm just trying to get this documented.
I
Or
don't
just
know.
pick the most, if you can't think of the second one per se, think of like a presentation that sticks
I
out
don't
to
know
you.
that I don't know what I did wrong. That's why I can't fix it. If I like the phone
Okay.
call thing, you know what I mean? When I was in the beginning, when I was making appointments on the phone, I was bad at it. So I watched a lot of videos, I listened to your stuff, and I changed stuff. So now I'm really good at it. But I
Right.
don't know what I'm doing wrong in these calls. Like the one guy I went through your whole, like what I actually do is I take out the papers that for your pre-qualifying, you know what I
Okay.
mean? On
Yeah.
the internet, you have stuff that you can download. I downloaded it and I made a whole bunch of copies and I have it in my little portfolio. So I just say, hey, okay, I'm going to ask you a couple of questions. And I rip it out and I say, I just ask the questions that you have on that
Right.
piece of paper. You know what I mean? That's what I do.
Right.
I
Okay.
go right to the soup to nuts. And then the one guy, like he was a door knock. That's right. I did sit in front of him. He was a presentation. That was the one guy, but he let me in. He even told me I'll spend $100 a month. And by the time I got to the end, he was like, no. I was befuddled.
Okay, so let's talk about that one. I think let's spend some time there, because it sounds like you had a buyer possibly, but then he changed to a non-buyer. So there's something you said or something that was presented. It may not have been something you done per se that caused him to put the brakes on, but to have a reversal like that can be surprising. So let me ask you some questions about that. So let's think about that for a minute.
I think it might have been the guaranteed issue thing.
Okay, that might be the case. So and you're familiar with my training enough to know, pre-qualification is big.
Yeah.
So you pre-qualified him. What was his reason that he wanted life insurance?
To leave some extra for his kids.
So when you say leave extra, did he already have life insurance?
Yes, he actually his funeral stuff was all paid for. At least that's what he told me. I didn't actually see that.
Sure.
But That's what he told me. He said my funeral and everything. He had a prepaid deal.
Yeah, he had a funeral plan. Okay. So why did he want to leave extra to his kids? What was his motivation?
That's what I asked him. What do you want to leave extra for? He said he wanted to leave something extra for his kids, and that was it. Okay. So should I have delved more into that?
Yeah. I mean, sometimes, it's good to don't take an answer on face value, explore it a little bit. If only for the reason to allow the emotion to come out a little bit more, right? Maybe he'll talk about a certain kid that he really loves and had a hard time, maybe lost his spouse, or, there could be some underlying emotional thing. And when you come back with, hey, that's interesting. You've got coverage and you're not buying for a funeral. That's unique. Why do you want to leave money behind to a kid? And maybe you'll get this information. And most importantly, not only will they go deeper, but then now you've got the ammo to close a sale. So when they object to a feature of the product, you can go back to what they said was most important. And I'll teach you how to frame the guaranteed issue a little bit better, I think, in a better positive light. But you want to tie in those emotional reasons to buying and remind them that you're thinking of somebody else other than yourself, and why, even though this is a guaranteed issue, it's still a good deal. We'll get to that in a minute. But perhaps it's always good to go a little bit deeper. Don't take an answer on face value. If you get the opportunity to understand the underlying emotion, that's critical to sell life insurance. So he already had life insurance. His funeral expenses are paid for. He wanted to get extra coverage for his kids. Why was he guaranteed issue?
He had just, he had like so much things. I think the other thing was too, he was, wait a minute, what was it? It was seizures. He had seizures. He was an epileptic. He had seizures all the time, like regular.
Okay.
It wasn't something that happened 10 years ago. And he was not able to walk. He had to have a chair or something all the time.
Like he's in a wheelchair?
Yeah. He wasn't that day, though. I was like, how is that possible? You're walking now. He's like, oh, no. The day after I have the seizure, I have to use it for 3 days.
Okay, so he's out of it. So he uses a wheelchair. He's required to use a wheelchair at certain points. Okay.
Right. The days like he has a seizure or whatever.
Okay.
And he told me the last one he had was like 2 weeks ago.
Okay. Carriers. I'm just writing this down. That's a difficult underwriting combo. I'm trying to think if there is a carrier that would take that, even with current seizures. Some carriers are okay with current seizures, like Settlers used to be when they're in the market. They're not anymore. But the problem is the combination of the wheelchair, and requirement of it. Does he have home health care or anything like that?
No, not that I recall.
Okay.
He did have, I think his sister was staying with him because he, does have seizures all the time. Like,
yeah. Okay. So
often.
Said he had a bank account or a Direct Express.
Yes, he had a bank. He had a bank account. I asked him about that.
Was he comfortable drafting the account? Did he say yes, 100%?
Yes, he was comfortable drafting. He said that's how he paid for something. That's how he does all his stuff.
Okay, so he's selling you on why he does it. Okay, that's good. And the last point, price. I mean, he said flat out, yes, I can afford $100 a month, no problem.
Well, because when I asked him, he was saying about the kids, and I said, so what were you thinking about? How much? He says, well, probably about $100 a month. I meant how much did you want to leave to the kids? But he said $100 a month. So
okay. But that wasn't at the point in the conversation where you asked the budget. He just said that early on. Is that what I'm hearing?
Right. When I was asking about how much he was wanting to leave for the kids, he said, well, I think I can afford about $100 a month.
Okay.
So I guess he wanted me to figure out how much $100 a month would be to leave the kids.
Gotcha. Okay.
I'm just assuming.
Okay. Did you ask the budget question though at the appropriate time, or did you just in your mind mark that off as, okay, he can afford it? Does that make sense?
Well, I did. I went back and said, okay, after I did my whole thing, I went back and said, okay, you said you can afford $100 a month? And he said, yes.
Okay. So he said a 100% positive. And the
Yeah, there
second
was
time,
no,
yes.
which was why I thought I had the sale
Mm-hmm.
for
Okay.
sure.
So,
And just at the end, he was like, no, just
yeah.
like that.
Okay. So far, so good. I mean, what I'm hearing here is that you went through, well, I'll get to that at the end, but I'm not hearing anything too concerning. Guaranteed issue, yes to the money question. And I'll just say as an aside, I think this is worth noting. What you want to see when you ask the budget question is not, and I know you didn't do this because you had the second time. You don't want them to say, I could probably afford $100. Everything that's not a yes is
Right.
no, right? So I think I could afford $100. That's a no. You should say, well, oh, that's fine. If you're not sure, that's how you should take it. If you don't think that this might work, what about if we looked at $60 to $80 a month? And then they'll be like, yeah, that'll be good. You want a confident yes. And it sounds like you got it the second time, which is fine. But for you guys out there who use the premium close, you've got to get 100% confirmation. 99% confirmation or a maybe or something close to that is a no. So bump your price down and keep going. Okay. Now, let's talk about selling the client on this, because we've got a client who's a high odds buyer. They have a reason why to buy. They've got a budget, a bank account, health is fine. That's usually never a problem, but they've got the need, desire, bank, and budget. That's a key thing. Let's talk about what happened next. So describe how you went through the presentation process for the audience and tell us what you did.
Like I said, I sit down and I open my portfolio and I grab out that piece of paper, that says pre-qualifications on it. And I ask the questions of, why am I here? What do you want this for? And all that stuff. And then I start with the birth date. And
let me stop you there. That's not what I meant. That was my fault. I'm sorry. What I'm asking you is, once you've done all that, then we move to the section, right, where we talk about the difference between term and whole life, right?
Oh, well, yeah. Right, the globe life and all that stuff. Actually,
yeah, describe to me in that
first.
section. Yeah,
I usually do that first.
Go ahead.
Come to think of it, I kind of do that first. Like I actually had some guy I called the other day, and he was all pissed off on the phone when I called him. He was like, I need to know the difference about all this crap on the television, and someone says this, and it's not that. And I was like, okay, calm down. It's all right. Then I'm your guy. I said, if that's what you're concerned about, you can't differentiate. I'm the one you need to see. And he.
Did you book that appointment?
I booked the appointment. I made the sale.
You did. Yeah, I was about to say that guy's a buyer 100%. He's he's not mad at you.
No, he was
the world.
He was just pissed off that he didn't understand what was going on. And
good.
Yeah, absolutely. He's funny.
So let's go back to the other one. So,
sorry. Usually I do that in the beginning. I tell them that, I show them my license or whatever. I guess that's when I'm doing the rapport building thing. And I tell them this is the difference between us and them. And,
okay.
we have a lot of carriers that we can use. And, this is term life, what if you outlive your insurance and all that stuff.
So you did that in the beginning.
I do that in the beginning.
That's before you ask the health questions.
That's before I ask the health.
Did you explain that with this prospect? Did you explain to him what you offer and the benefits of what you offer?
Yeah, I mean, yes, I do. That I have a bunch of different carriers, and it's the same price forever. It never goes up. It never goes down. It's once you buy it, that's it.
Did you explain to him about first day full coverage?
Yes.
That's the problem. You offered him something he can never get. So here's I think something worth changing. I am a huge believer you should never, and there's two reasons why here. You should never pitch before you should never present, or when I say present, you should never talk about features and benefits and our competition until you know your prospect is either qualified. Because here's the thing. Number one, you're selling before you know what matters to them. Okay. If you think about this at the very beginning, what do you know? What do you really know about your prospect? Nothing much, right? You just know that they sent a card back. They might have an interest, right? But we don't know what's going through their mind as to what's motivating them, what their health is, why they would want. We haven't pre-qualified them yet. So we can't offer them a customized solution. So if we begin to tell somebody about term versus guaranteed issue versus whole life on one level, we're premature in the process, because what if they actually did want a term? It's unusual. Or what if they want something that's not necessarily what we're talking about? So I think it's really important that you have that conversation and immediately remove it until after you've done the pre-qualifying. Now, here's the big thing that I think what happened with this. This would be my instinct. I wasn't there. It's hard to say 100% sure, but my gut is telling me that when you offer them something that they can't qualify, and it's like you give it to them and you take it away.
Right.
That is going to, in some people, piss them off, get them mad. Because you just said I could get this and now you're not. I can't. Well, that's lame. It's like going into, saying, hey, we can get your financing on your lead or on your cars, at 0.9%. And as you're talking to your client or your prospect on the car lot, and then you run the credit afterwards and oh, actually we moved the 9 over to the left one. It's 9.9. Now the fine, instead of the monthly bill being 200, it's 800, of course you're going to have some fall off, right? When you actually see what they qualify for. So it's critical from a sales perspective that you don't categorize where they're going to fit until you know where you're going to fit. And by default, correct me if I'm wrong, you're telling them about what we do before we even know we can qualify for them, right?
Yes, and that must be what I'm doing wrong. So now I can go get rich. You see, if you don't know what you're doing wrong, you can't fix it.
Right.
But you found out what I'm doing wrong, because I do that every single time.
Right. And it's so critical. It's one of the most critical elements of sales that I teach, is that you never sell an unqualified person, because on one level, when it comes to life insurance, we don't know what they can qualify for until we qualify them. And then number two, we don't want to know what they want, and then if we offer them something we can't get them, we look unprofessional. And a lot of these people we see are going to get mad on some level, especially ones that don't need it. That's another problem with this. I don't think it's a big deal with this particular client, but it's not a need. Okay. He could die tomorrow and his burial costs are covered. This need for coverage is actually just a desire, a wish. He wants to go above and beyond, but it's something he could leave it if he had to. So there's not as much investment in a supplementary policy like this when it's not necessary for so that's one of the things these kind of sales are more difficult sometimes, only because you've got to attach a strong desire to the purchase of the product, especially if you've got underwriting issues that don't allow the client to qualify for the best coverage, So
I get a lot of people that are guaranteed issue.
Yeah. So let's talk about this case further and how I would recommend you to do it. So I'm going to kind of play salesperson here. In the beginning, my talk is like this. I'll say, hey, Mrs. Jones, thanks again for having me today. My name is David Duford. Here's my license. I'm a licensed life insurance agent, have been since 2011. I've worked with over 1,500 people to help them with their life insurance needs. And the reason people do business with me is I shop around. I try to find them the best price and coverage. If you're looking for the best bang for your buck, that's what I do. So now that I've gotten to know you a little bit better, what were your thoughts and concerns when you sent in the card? So I think where you were saying your explanation of term and whole and what we do is somewhere in there. Or
yes.
Yeah. So you notice I didn't say anything. I went right to that pre-qualification sheet. and I'm asking the questions, all right? And as I'm asking the questions, especially health questions and budget, I'm formulating in my mind which carrier is going to be the most sensible, okay? And again, it's harder to do as a new person, but the point is, once you've asked all of that and they fit the bill, they're pre-qualified, but they still don't know what they're going to get, which is good because now that we know we've got a good chance of selling, we can go ahead and build value into the product we're selling. So here's how I do this section. It's the term versus guaranteed issue versus whole life. Now, here's another element here that's important, and this goes back to what you're experiencing. You know, you said that, well, in so many words, I could sense the guy was irritated that he didn't want to buy because he couldn't get first day full coverage, and that's what he's saying. Now, how can we overcome that? Because wait a minute, isn't the presentation that I teach require you to talk about first day full coverage? No. Under certain circumstances, you don't want to talk about first day coverage because why would you when you can't qualify that person for someone? That just is irritating. So here's how I would frame this. We want to, in the sales presentation, contrast what we do against a bad guy or against a competitor. So we want to still talk about term insurance in the same breath. And let me walk through that. So one of the reasons I'm here today, Mrs. Jones, is to explain to you the difference in how life insurance work. I'm sure you get all sorts of junk mail and see TV ads that explain, you know, term insurance and no questions asked insurance and that kind of thing. So what I want to do today is explain it to you so you can pick the best option for you, okay? So let's talk about term insurance. Have you ever heard of term insurance before? No? Well, yes, doesn't matter. If they say no, most of them will, or understand what it is. I'll say, look, term is simple. Term terminates. When you take out a term insurance plan, especially if it's with AARP or New York Life or Globe Life, you live past 80, it cancels. They don't care how long you've been paying in. It literally terminates, okay? So what if you live past 80? You know, what if you live a long life? You're healthy, or even if you're not healthy, you die a day after. You don't have coverage. What's all that money you put in worth it to you? Doesn't make any sense. And then to add insult to injury, if you check out here on the form I'm going to show you, you can see right there where there's price increases every 5 years. So you're 65 now, at 70 or 71, I think. The price goes up, and then again at 76. You know, then I'll insert a story about a client who had a price increase, had to drop coverage. And I'll say, bottom line, I don't sell term insurance because I don't believe it's right for final expense. So I've knocked out, script off my competitor. The second phase I move into, now that I know through all these health questions, understand at this point I'm thinking, okay, I have to have a good idea at this point if this is guaranteed issue. And because I've collected the health questions and I'm pre-qualified, I think that getting first day full coverage is not going to happen. So I'm not going to talk about first day full coverage. I'm going to talk about and build up why a guaranteed issue plan is the best option. So here's how this sounds. So I'll say, Mrs. Jones, that leads me to what I have to offer you. And I'm going to be straight up with you. I'm going to tell you the good and the not so good, okay? So let's start with the good. The good news is that despite your seizures and being wheelchair bound, it's very hard for a lot of companies to cover. I can get you coverage with a burial insurance company. The way it works is very simple. The rates never increase. The coverage never cancels because of your age or health. So you get peace of mind knowing that what you buy is good the rest of your life, and you don't have the price increases like you do with term insurance. So let me tell you the not so good news. Again, I want to be straight up and transparent. Because of your ailments, even though we can accept you, the only kind of coverage we can do is called a no questions asked life insurance. It's very simple how it works. You take this out. If you die by accidental means, after the first payment for any accidental reason, it will pay the full death benefit. So you're covered for accidental. However, if you're talking about natural death, you have to live through 2 years of making payments before your coverage is full and in effect. If you die beforehand, the good news is that you don't lose everything. The company will actually refund your money back. Plus, in this case, AIG is 10% interest. So it's like better interest than what you get through the funeral home or through the bank account. So I'm sure if you're like a lot of my clients, you might be thinking, well, a 2-year wait's a bummer. You know, why would I want to get life insurance and have to wait 2 years? Let me explain. I have had a lot of clients. In this case, you would say one of my mentors in the business has had a lot of clients that have suddenly died very shortly after the 2-year period. They were otherwise even not in great shape, not in good shape, but maybe they're in bad shape too. And once they crossed that 2-year point, they knew they were fully covered. And because something happened suddenly, they had the coverage in place to take care of their kids, to take care of their son that they love, like you do. So they would leave them better off. And I'm not here to try to tell you or sell you on, why a 2-year wait is great. I mean, it's not good. I wish I could do better. But the bottom line is the sooner you get this started, the sooner you get through the 2-year period, and you have the peace of mind knowing that, again, your son has the life insurance money to take care of whatever it is that he told you and to give you that kind of that leg up in life. So my question is this. There's 2 types of people that I present to that have that there's 2 types of opinions on this kind of policy. The one is, I hate this kind of policy. Doesn't matter what it is, how it is, I'm not going to buy it. And that's fine. The second type of person is the guy that sees, okay, yeah, I'm not thrilled about it, but I can see where David's coming from. I can see me getting through this 2-year period. I'm probably not going to die anytime soon. And knowing that long term, the value of this plan far outweighs the short term. So my question to you is this: which one of those do you fit in? So script off. So lot to unpack there. But what I do here is, are you still there, Lolly? Okay, good.
I'm still here.
Okay, just making sure.
I'm just listening.
Okay, so what I do here, and I've created this kind of just by experience. I don't. Some sales trainers for final expense will teach agents how to not kind of avoid the guaranteed issue question and not tell them that they're not covered for 2 years. I don't do that because people change their mind and cancel, and that's frustrating. I'd rather them not take the plan and because they know what's going on than to try to do some trickery. All right. So in this case, I tell them straight up, here's what's good about it. This is the only company that's going to take you. This kind of company is the only kind that'll take you. And I'll tell them the bad news. No one's going to ever cover you for first day full coverage because of your conditions. But regardless, you got to look at this as a long-term opportunity, not a short-term. I'm on your side. I don't like the 2-year wait. I wish I wouldn't have to. I wish I could get everybody first day coverage. But here's the benefits of thinking longer term. And you got to, and then you notice how I reference it back to the kind of scenario with the son, right? The reasons why we're tying the reasons why to buy back earlier on from that information you gleaned in the pre-qualification section. And then I ended an ultimatum because, again, I really think that most people, I would say about 8 out of 10 will buy this plan if it's positioned the right way, and 2 out of 10 won't because they're hard-nosed and stubborn. And I would rather know that on an ultimatum than, jerk around, with a maybe, I don't know. I want definitive, a definitive position. So that way I can walk away. I want to walk away knowing I did everything to get this guy and I uncovered every stone, and I got it or I didn't. I don't want to leave thinking, oh man, a no is okay as long as you've basically expended all your ammo. Do you have any questions about that?
No, that's great. Okay. I'm thrilled because now I know what I'm doing wrong and I can fix it. And I think the better I get, the better I'll do, of course. I get lots of appointments, but a lot of them are guaranteed issue. And if that's how I'm messing up, then that would be great.
So a couple other things, real quick here. So number one, if I pre-qualify them and I know that they're going to be first day full coverage, then what I'll say instead of that is I'll say after term insurance, I'll say, okay, so the other kind of policy out there is a no questions asked insurance plan. You probably heard of Colonial Penn, right? Rates never go up, coverage never cancels. Well, here's the catch. Let me show you this letter that they send you probably every week in the mail. Look, see where I highlighted it. Tell me what that says. Well, it looks like no coverage for natural death, and I'll get my money back and plus 7% interest. What does that mean? Well, Mr. Prospect, what that means is that if you die from any natural causes, it doesn't matter, heart attack, stroke, stents, whatever. If you just croak in the first 2 years, they don't pay the full amount. So you think you're buying $10,000. not for the first 2 years. You're buying your money back plus 7% interest. So it's like term insurance, but the opposite. The risk is on the front end. Nobody knows when they're going to die. Healthy people die, and people drop dead all of a sudden all the time. And when you buy insurance, you need peace of mind totally from the first day to your last, which brings me to what I do. What I do is whole life final expense insurance. It's very simple how it works. 1, the rates never go up. They're locked in forever. 2, the coverage never cancels due to age or health. So you have peace of mind that coverage is as certain as the sunrise as long as you pay your premiums. And because you have good health, we can qualify you for first day full coverage for accidental and natural death from the first payment. Unlike Colonial Penn, unlike the 2-year waiting period products all over TV. So bottom line, if you're looking for peace of mind, my plan does it for the best price and the best value. My question to you is this. Out of these 3 options, a term insurance that terminates a guaranteed issue that doesn't cover for 2 years, or 3, full day first coverage for me, which makes more sense for you? So I kind of went through that hastily. I'll slow it down. I'll pace it a little better. I'll lower my tempo. I'm trying to just get through this for the recording. But that way I get them on board with mine. They're closed conceptually on it. That's the difference there. Now, where I want to ask you one question here as we get closer to concluding this is, let's say you find somebody who's on board. How do you present price in the company? Can you kind of take me through that process? And then how do you ask for the business?
Oh, I do the thing where you write the 3 prices down and the 3 face values, and I hand them the piece of paper and I shut up.
What do you say as you hand it to them?
This is what I have to offer. The choice is yours. My recommendation is A, B, or C. What do you think?
So when you say my recommendation is, like, give me an example where you would use that in like an actual like my recommendation is the middle one. Do you ever say that, or
I usually use the middle one.
Only do you explain because why? Do you explain why?
I don't explain why because I don't have a why.
Okay, fine. That's fine. So let's refine this a little bit. I think this is really important too. So what you want to do is I learned this from a sales trainer. Great guy, Claude Whitaker. I talk about him.
Right. I think I read his book.
Okay, good. He had a video where he talks about using the terms recommendation and popular and explains why he does this in the sales presentation. If you think of people, we all want to follow the herd. Generally speaking, we want to take the safe route in a buying purchase. And so using words that give a sense of safety, that other people like this, and you're also recommending it because of an expert position you're in, it cools the resistance that some people have, because people want to be comfortable in their decisions. A lot of people need comfort in making a decision, and they rely on other people to help them to, that's what you are. You're an assistant buyer. That's why they say that, because you're helping this person buy. Because a lot of people don't feel comfortable buying until they get advice, and you got to play that role. So how does this sound at the end? So what I like to say is I do the same thing you do. I write down the 3 prices on a clean sheet of paper, and I'll say, Mrs. Jones, let me show you the prices and the coverage that I can get for you. So I pass the page across the table, and I say, here's the 3 plans, and I'll kind of sometimes sit to the side with them, okay? I won't be like across the table. They're here, I'm here, pass over. I'll try to get to the side so we can kind of both read this together, okay? The closer you are, it's kind of like a cumulative team effort, if you think.
I usually actually sit there. That's where I position myself most of the time, is next to them. Okay, I rarely ever sit across from them.
Okay, cool. So here's how the script sounds. I'll say, here's the 3 options I've got. We can do the 10,000 for 20, the 15,000 for 40, and the 20,000 for 60. Of course, the reason I put these 3 prices down is because you said you could afford, $20 to $60 a month. But my recommendation for you, based on what you're telling me, is to pick the second one. Here's why. Right now, your average, you're telling me the reason you want to buy is because you want to bury somebody. right now, like, the average cost for a burial is close to 10,000. You're 60 years old. You may have another 20 years left according to averages. And just like you've lived long enough to know that prices go up, it's the same for funeral expenses. The most popular decision in people in your circumstances is this second one, because it accounts for the reality that prices will continue to go up as you age. And if you pick the lower one, then you may be in a position of not having enough and having to buy more insurance at a higher price later on, and you may not qualify. So my recommendation is to pick the second one. Which one do you think works best for you? So you see how I use recommendation, and then I said the reason why. So you always tie recommendations with reasons why. Always think whenever you say I recommend this, follow it up with the reason why is this. We want to tie a reason to purchase to a fact. Okay. Better yet, tie it to a fact that they told us earlier. I want to buy enough to be buried. Okay. You say you want enough to be buried. So I recommend 15,000. Why is that? Because you're telling me you need enough to be buried. And right now 10,000 will do it. But what about in 20 years? Not going to be enough. We can tell, looking back 20 years, prices were $3,000 to $4,000 less on average. So they're probably going to go up by that much in the next 20 years. And you might as well, if you can afford this, buy that much anyway to account for it. Then I said, that's the most popular decision amongst my clients when I explain it to them, is to buy this plan instead of that one. And then I end up basically closing with the same script, which is, which one do you want to go with? So I still give them the option, but of course, my status as an assistant buyer and as a professional and expert, I'm steering them in the right direction. I'm not forcing their hand. I'm giving them something to consider and give them justification to go higher to buy a bigger amount. So if you start doing that, that'll help. That'll help ease some resistance that your prospects are going to have in buying, and you'll convert more there. Because sometimes people might get finicky at the end too. Like they want it, but I could wait. If they're not 100% on board and confident. And by saying recommendation and popular, those build confidence in buying. Does that make sense?
Yes, absolutely. It makes sense.
Do you think there's anything else that you're doing? I think we covered what I would call the 80-20 here. I'm a big believer in Pareto principle, where 80% of your problems are caused by 20% of what you do or don't do. In this case, I think this is all a sales presentation issue. I think we've diagnosed, if it sounds like you're like, oh my gosh, this is it. So you're obviously doing this on every sales appointment.
Yes, and I think that if I just change it like you told me to, because a lot of my customers are guaranteed issue customers. So I'm telling them up front that I can get them first day coverage. And then in the back end, when I tell them, oops, sorry, you don't qualify, they're like, well, see ya, hate to be. So if I change that, I feel confident that you found the problem.
Yeah.
I mean, that's my take on the situation.
Yeah. I think what we can do is, going forward, you can save a lot of those. Right now, you're probably writing 2 out of 10 of those when you should be writing 8 out of 10 of those. So yes, I think that's a big change we can make. Also, feel free to reach out to me, please, because even if you think it's guaranteed issue and you may have even looked at the companies, call me up and let me run some quotes on you for it. So just run the underwriting by me. Let me do a risk assessment for you. So I can see, just in case we can't turn these potential for guaranteed issue into first day full coverage. It might require you to get another carrier. It might require you, an extra step or an extra presentation, but most of these people will allow you to come back and sell them if you can get first day full coverage. So always call me or text me on that. Even if you don't think you can get them, I'll tell you. And again, I've seen pretty much everything. Is there anything else that you think you may or may not be doing?
No,
beyond that?
I think you hit the nail on the head, actually. I can't think of anything else. I mean, I'm so excited. I just want to go make appointments now.
Good. So here's what I want you to do. This isn't over yet. At the end of the day, I think we've done a good job identifying where we can fix the bad results in your sales efforts. However, I think we can ultimately take this into overdrive if you take the next step which again, this is amazing. Record yourself giving a sales call. So
Okay, I'll do that.
Get your smartphone, put the record app on, hit record, shove the phone in your pocket or put it on top of your books face down with the screen blacked out, and keep it handy. It will record everything clearly. And then what I'd like to do is to actually hear your sales call. We don't have to do this on video. We would just do this in private, but this would be a way for me to listen to what is actually going on and provide further refinement on top of what you're doing right now and the suggestions I made today. There could be more. Sometimes like you didn't realize you're doing this. There's other things you could not be doing, you're not realizing, and then when you hear it, you're like, oh, why didn't I see that? Well, it's just the way it is. So do that for me on your next sales call so I can provide further guidance. So, are you back? There she is. There you are. You're back. Okay, cool.
I'm back. Sorry about that.
That's all right at the end. So
I think I have a crappy internet.
No, it's been good all along. So anything else, Lolly? I think that wraps up everything.
No, but yeah, that's good. I think I'll do that. But the problem is I use my phone a lot for, quotes and quotes.
Okay. Oh, I see what you're saying.
I do. I use it a lot when
It should be able to run in the background, the recording.
Okay.
Yeah,
right.
You could click the recording. You should be able to minimize it and then go to your quote screen. And even if you're running quotes, pause it and then go back to it again or something like that. But you should be able to run it in the background.
Okay.
You should be able to run your quotes. If you can't, let me know. I'll kind of do some research for you. We can figure out some alternative way to handle it. But
well, I have some digital recorders also, so.
Yeah, you can be like an FBI wiretap scenario. So. So, okay, cool. Well, guys, I hope you enjoyed this training with Lolly. It's been really good. This is what I love about doing these detailed analysis because, we as agents don't see sometimes the things that we do. And that's just how it is. Sometimes it's so obvious when you have a third party take a closer look at your activity or your presentation or
right.
whatever it is that you're doing. And very often it's just one thing that needs to be fixed. Most people are closer to being to the point of being proficient than they think. Like Lolly's nailed the appointment setting. That's usually where a lot of agents are weak. She's getting fresh leads. It's just about now we know it is a sales issue, and we probably did a good job of identifying what it is and how to turn it around. And we'll reinforce that with hearing live recordings of it and me providing further guidance. So, again, that's what's difficult about this profession is we're all lone wolves. We're not doing this under surveillance, and we're not doing this in a position where we're constantly getting feedback. And this feedback is valuable because it exposes where our weaknesses are and how we can strengthen them and become better and improve. So, Lolly, thank you so much for joining me. This is Dave Duford at davidduford.com. Please subscribe if you like this kind of content. Thumbs up the video, share it with other agents who may be struggling and want ideas on how to fix any problems they have. And if you haven't already, check out my recruiting platform where I take agents to help them become top producers. You can go to davidduford.com, click Join Dave's Agency for all the information on how final expense, annuity, mortgage protection, and Medicare supplement recruiting works with my organization. Lolly, thank you for joining me.
Thanks for having me.
And y'all have a great rest of the day. All right, guys. See ya.